Welcome to Vishal and Company, where Equity Guru's own Vishal Tura, Taku Ndachena, Colin Botrell, and Maddie Grace examine the week's financial events in real terms, bringing the esoteric blur of public market activity into sharp focus. So come in, sit down, put your feet up, and enjoy.
Hello, everybody, and welcome to this week's edition of Vishal and Company. This week, Vishal is going to give us some quick weekly market updates, talk about how the markets are pricing in the vaccine approval, the European Central Bank's response to the strength of the euro, why he bought Blackberry for the first time ever, and finally, he's going to take a quick look at the airline industry. To finish off the show, TK and Colin are going to lead a discussion about trading psychology. I'm the resident not finance person to keep all of these guys in check when they're not making a whole lot of sense. And that is all. All right, Vishal, all yours.
All right, thanks, Maddie. So we're getting close to the holiday lull. The last few weeks of December are generally quite slow, but in December we do have what is known as the Santa Claus rally, and so far we are seeing the S&P 500 make record highs in the past 2 days. NASDAQ made a record high yesterday and, the past 2 days as well. Probably not today. We'll wait and see. And the Dow Jones is apparently set to make a new record close by the end of today. And of course, the junior or small cap market, the Russell 2000, really, really strong, making new highs. So in terms of strength, the small caps and the S&P 500 are pretty much leading the way here. The Russell 2000 or the small cap leading by a larger margin here. And the markets are pretty much pricing in two things. They are pricing in that vaccine or in a pending FDA approval of the emergency use of a vaccine, and of course that stimulus talks, which is back on the docket. And by the end of the month is when the program actually ends. So technically, tons of Americans will be having to foreclose on their homes and all that kind of stuff. So I think the bill will be passed. That stimulus bill will be passed sometime by the end of this month. I don't think they're going to let that type of crisis occur, and it was just politics and just some it was literally politics, right, which dragged this all the way to the deadline or the last week for the stimulus. So those two things are coming. We have talked about stimulus in the past always, how cheap money is going to keep coming. It's really never going to stop. And that really does mean that stocks are pretty much the only way to go here. So for the foreseeable future, until some sort of black swan event occurs, markets are going to be continuing this uptrend, and they will be making record highs week after week, in my opinion. There will be some pullbacks, right? There will be some pullbacks, and pullbacks are normal in price actions because nothing moves up forever. But of course, you will be notified if I think there is some sort of reversal pattern potential incoming. I want to look at two other markets here quickly. The first one I want to take a look at here is in Asia. This is the Nikkei 2225. So a lot of people know about the boom, right? The Japanese boom in the 80s. In 89, we hit a high of around 39,000, close to 40,000 on the Nikkei 2225. And since 1989, we have not hit those levels. But where we are in the Nikkei today, we have not been at these levels since 1991. So almost 30 years for the Nikkei to recover, to come back to these levels. And I think it's some crazy moves are happening in some of the Asian markets, not only the American markets, but this whole idea of cheap money and central bank policies, I think is going to make equity markets around the world rise. And then we get to that point where, okay, Asian markets are making new highs, American markets are making new highs. What's not making a new high? And is that stock market now undervalued? And usually, right now, Europe is coming into mind. Although the German DAX is pretty close to make all-time highs, the French markets are still has some room before it tests all-time new highs. And of course, the Spanish markets have a long way to go before they make new highs, but they have had a strong 5 weeks here of just pure green candles. What I want to focus on, though, is the UK markets, or the FTSE. Why do I want to focus on this? Is because the UK is the first Western nation to approve of vaccine use, and they are going with, I believe it's Pfizer's vaccine, and vaccinations are going to be beginning as early as next week in the UK. So just sort of, a case study to see what a vaccine can do, an approval declaration of a vaccine, and how it can affect stock markets. As you can see here, the FTSE has closed in a breakout zone, right? It has closed above this previous resistance level at 6,500 here. And look at the chart here, folks. There really is nothing to impede it until we hit 7,000. So I think the UK FTSE here is going to start to pop due to this use. Oh, not my firewall there, but due to this emergency use of the vaccine here. And I think, as I said, a nice case study, because how will the American markets react once we get that FDA approval of a vaccine, which is probably, I think days away, maybe could even happen on the weekend, right? So something here to take or keep an eye out on. Oil is still holding up here. I have talked about this last week and the week before about oil being that COVID vaccine play, because it would mean that economies would not have to be shut down. And we are pulling back and looking like we are about to swing and honestly hit $50 a barrel. That's what it's looking like here. Let's quickly look at gold, because I know a lot of people are interested in gold and silver. Gold is at a very important resistance zone here, which is 1850. So again, resistance meaning a price ceiling. So what I want to see with gold is a daily close above 1850. And that is, a level that I know a lot of analysts are using. And we just have to be patient until that close happens. If we do not get that close above 1850, there is still technically room for another move to the downside to gold. And a lot of it, will probably have to do with the dollar. So we'll just save that for last here, because I just want to quickly look at the cryptos here. Any of you guys been following the crypto markets lately?
Yeah, I think I mostly cover it through these shows of Vishal, so I kind of depend on you to keep me up to date.
Okay, well, we talked about how it looked like we were about to make record highs in Bitcoin. Of course, some of the exchanges did print record highs in Bitcoin, but what I'm seeing here, it just looked Bitcoin might be rolling over as it tries on a third attempt a fourth attempt if we do come back up to break above the 19,000. What was it? Well, close to 20,000, right? So it's looking a bit choppy here, but honestly, what I'm seeing here is a potential of a rollover here in Bitcoin. But what I'm waiting for to confirm that is a candle close below the 18,600 level for Bitcoin. So let's keep an eye out on that. And of course, the crypto markets are open 24/7. So technically, we could see this break tomorrow or on Sunday over the weekend. So 18,600, I think, is a key level for us all to watch to see what Bitcoin will do. If we do break below that, there is more room to the downside. Perhaps we go back to 16,500 here. But of course, if we do hold above here, we could either range for a bit or break above 20,000. But I want to now just quickly focus on the US dollar here, because I know it's something we have been talking about for quite some time. I've said this is probably the most important chart in terms of macro and economic ideas for the future here. And look at this, folks. We are melting below our support and our trend line, which goes back all the way to 2012 here. So a very key break for the US dollar. And you guys know I've talked about the currency war and what a weaker dollar means, right? Because the US dollar is that reserve currency. A weaker dollar technically means other currencies that are priced in dollars on the exchange rate, of course, the floating exchange rate will be strengthening. So, of course, we've seen, the Canadian loonie here, right? So, again, this is US CAD, which means When the chart is moving up, the US dollar is getting stronger. When the chart is moving down, the Canadian loonie is getting stronger. And you can see here the loonie has actually broken below a major price floor or a support zone here at about the 130 zone here, and really looks like we will be seeing the 126 to 127 zone being hit here on the loonie. But the one that I think is the most important, because it is the most traded instrument on any markets here, is the euro US dollar. When the chart is moving up, it means the euro is getting stronger. When the chart's moving down, it means the dollar is getting stronger. And as you can see here, folks, we were ranging here or consolidating in the euro, but we have broken back above, and the euro is hitting levels of 122. And I've said in the past, Europe is a largely export nation. So generally during times of economic crisis, countries cut interest rates to zero and try to weaken the currency to boost exports, and also to get businesses and individuals start domestic companies within the country rather than importing expensive raw materials because of the currency, the differential now, right? So there's some issues in Europe, and I've said this is the currency war because every central bank is going to be trying to weaken their currency, and I think we have begun to see the beginning of this. This was the biggest news this week in terms of the macro front. The European Central Bank began calling large hedge funds and investors here. And you can see here a lot of controversy here because, it's technically not really free market, I guess. And I can tell you what the phone call probably entailed. Ring, 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 ring. Hey, this is the European Central Bank. Can you please short the euro US dollar? I'm pretty sure that that's what happened. The ECB is literally trying to get these large hedge funds a large amount of money to try to short the euro US dollar, which does mean they have to buy US dollars. And I think, this is the beginning of the currency war here. The higher the euro gets, it's something the European Central Bank doesn't want. And I know, TK, you follow currencies. What do you see here, man?
I see it as one of those last measures to try, control your currency, especially in a free floating market.
Yeah.
And it's kind of an indication of what we were talking about last week about the different styles of the central banks and how they're changing from lenders of last resorts to brokers of last resort. Where it's now, okay, our traditional ways of trying to control the currency are not working anymore. We've allowed the free market to judge where this is, but we have to, for lack of a better word, manipulate what's going on. And it's actually interesting to know that it's not quote unquote illegal, or it's happened before. The last time that it's happened, a big transition like this, was when America was about to get off the gold standard. The Treasury did a thing. I find this pretty funny whenever you read it. They announced that they're going to be buying back large amounts of gold. And people were like, oh, that seems like a nationalization of gold. And the Treasury was like, no, we're just buying back a large amount of it. And a couple months later, they basically made it law not to hold gold reserves anymore. So yeah, it's just interesting to see that transition now, kind of showing you at the tip of the business cycle, and they have very little in their war chest to do to manipulate the market now.
Exactly. So I think the currencies is something we have to keep an eye out on, and it's something that I follow very closely because I am mostly a forex currency trader, but I think the next crisis is going to be a currency crisis, and technically I think we're actually in it, and that's what I'm basing the moves in Bitcoin and the metals on. But this is that race to the bottom, so we're going to see what desperate measure the European Central Bank will take if these phone calls here fail. Blackberry, I want to talk about Blackberry, but before I do that, who's a Blackberry bull here? Disregarding the
I thought they were dead.
You thought they were dead? Yeah, fair enough.
Yeah, I had a Blackberry when I was like 15.
Oh no.
I've
I
never
just
owned a BlackBerry, but I like the company.
Okay. So a little secret here. Not only am I a contrarian when I invest and trade, but I am a contrarian with my cell phones. And I have been a BlackBerry user since 2012. I've owned every BlackBerry phone except the recent Key 2, and I think it was the Q10 way back in the day. And this is just the first time 2 years ago where I switched from a non-BlackBerry phone to obviously an Android phone now. So I've always been a BlackBerry user since 2012, but I've never owned shares in the company until now. Until now. So I know there's a lot of people on our Discord channel who did quite well with this trade here. And we did talk about this on my market moment, but there was an opportunity for us to get in technically. So I'll talk about the fundamentals in just a bit here. But we had a breakout here of a trend line. I posted in our market chat, hey, folks, we're going to pull back and look at that retest. I think it's a good time to get into BlackBerry. And then we had another opportunity when we broke out and retested this zone here. My fundamental case is why I was bullish, which I mentioned in the article, but I also mentioned before the news actually came out on our Discord trading channel. But BlackBerry, first of all, they have $1 billion in cash, which is pretty decent in these type of times. But I mean, it's not really surprising for a tech company. But cybersecurity has always been their major thing, right? And I think the Canadian government, if they want to help domestic companies out due to the economic crisis here now with COVID, they might actually consider going back to BlackBerry, because believe it or not, BlackBerry is releasing a new smartphone next year. And I think that's a pretty bullish sign, because there's so much competition in the cell phone market, and for them to now come back into it, it's quite a telling sign. But the biggest case for me was this, and it is the BlackBerry QNX operating system here. And what it is it's security software, and you can see what the news is already, but we'll get to that. But the security software, which you can use on life-critical medical devices, robotics, product lifecycle, and other security software here. But what I was very interested in was the usage of BlackBerry QNX in autonomous vehicles here. They have made a deal with Jaguar and Land Rover, and a lot of people don't know, but technically, in an autonomous vehicle, you can hack an autonomous vehicle, you can lock the doors, and then you can crash the car and kill the occupants inside, right? So a lot of people have called autonomous vehicles like caskets on wheels, but obviously cybersecurity is going to be a huge thing for that. Tesla has their own cybersecurity for their self-driving and autonomous vehicles, but BlackBerry's QNX here, I think, is something to keep an eye on. And there's right now 1.5 million cars on the road right now using BlackBerry's QNX. But as you guys saw here with that chart, we had a huge gap from 775. It actually hit my zone of 1250, which you can read about on the Market Moment article. But BlackBerry has now made an agreement with none other than Amazon. So a big boy, obviously, AWS, which is Amazon's vehicles and autonomous vehicles right here. AWS accelerating innovation with a new intelligent vehicle data platform, and this QNX software was a huge part of that. So I'm bullish on BlackBerry. If you want to look at some other large investors, there's a guy here in Canada by the name of Prem Watsa. He is dubbed the Canadian Warren Buffett. He is the CEO of Fairfax, and I believe he owns about 101.8 million shares of BlackBerry. So he's been a BlackBerry bull for quite some time. Not really sure if he sold some of his shares recently, but he's also in BlackBerry, and he is actually on the board of BlackBerry too. So he has probably maybe should have some skin in the game, obviously. But I think this is a really good setup of technicals and fundamentals combining well together here.
I gotta give Vishal a shout out. He actually warned me on November 30th, the Monday there. He's like, dude, I'm taking a position in Blackberry, you should look at it. And I was like, yeah, it looks good. Like I don't have much free capital. And then next day, of course, checked on Blackberry, and it was up. I think it was like 60% to Vishal at the top.
Yeah, 62% that one day. It was just ridiculous.
So I was kicking myself a little bit for not listening to you.
So, like this is again the whole thing about like technicals versus fundamentals. I wasn't predicting an Amazon deal, right? I saw this move here, and it goes back to, we talked about imperfect information. But I think that people have perfect information and can trade based on that. So I was assuming this run up was actually pricing in a surprise earning here on December 17th, which is still upcoming. So I was thinking, okay, a lot of insiders know that probably these earnings are going to turn out to be better than expected. So they're loading up on the shares. But obviously you can see with this run up, I think, the insiders and the market knew about this Amazon deal coming, which is why you saw this run up in Blackberry. So this is, again, why I look at charts and technicals, because I do believe, we live in a world with imperfect information. And by looking at charts, you can sort of predict where the money flows, and even central bank money flows, perhaps, when we talk about currencies, are flowing into. So I think this was a good combination of both the fundamentals, building my case, but the technicals, indicating that now's the time to get in. And we'll talk about, I know you two want to talk about psychology, and I can slip in the airlines there, but do you guys want to do that?
Yeah, let's hear about the airlines.
Okay, so well, I mean, you want to talk about psychology? I can fit that in. I know I have a good example about airlines and psychology, but do you want to first talk about why you think psychology is important?
Yeah, I mean, the case study I was actually going to bring up was just basically taking what could be considered like dead money in a losing position, and kind of making that decision on whether to move money that maybe could be used elsewhere, and kind of the struggle where you're like, I don't want to sell this stock, and then the next day it shoots up, and then move it into another stock that doesn't move. And I find, like, especially at the start, that was something that I really struggled with. So it was kind of along those veins is what I was thinking. And do you guys have any thoughts on that?
I actually do. We can actually take a live case. Well, with most investments, there are live cases outside of Airlines. But it's Intel is the one I want to look at, specifically because this is a story that goes back to 1971. So I'm not sure if you're able to bring up the chart from 2000, hopefully.
Yep.
Around 2000. So the story here is basic. It's simple. There was a technology boom around 1971 because of the information and digital communication second wave that happened, coming from telephones to the internet. And a lot of processing power was needed, and capital rushed into a lot of these stocks. And then it goes, you've been holding Intel when it was a small stock for a long time now. And as an investor, you have a choice here. Do I take profits, or do I hold on and hope that the company continues to perform and grow over time? But at a certain point in the stock market, for some reason, reality and what's happening with the market have a wide disparity. So over time, as information was coming through, people started to realize, oh, maybe we overestimated how fast Intel can grow. Maybe we should have sold. Maybe I should have cut out. And it dips. People cut their positions as it gets higher and higher. But as an investor, I'm always aware that with my buy trade, there is always somebody on the opposite side doing a sell. So when I sell, there's somebody on the opposite side doing a buy. With each trade we have. So at the tip, right there in 2000, there was somebody or some institution that put in a buy order and everybody else sold. And you're stuck with that stock for close to 20 years to try and break even. Just because you weren't really factoring in a lot of the human psychology behind what's happening with that current stock at the time. And obviously now we know with hindsight, there's nothing better than hindsight in investing. But that Intel is an amazing company and it's gone through some trials and tribulations, but it's still a cash cow. Fast forward a bit, 20 years, and we go to the darling stock of today is Tesla. If you look at its price history, it has the same telltale stuff. It's a technology company. It's breaking into EV. We're at the beginning of the great surge, but the actual technology behind it hasn't been fully implemented. They still don't have autonomous vehicles, etc. The story goes on and on. But the numbers are not telling us the same thing. But human psychology is allowing people to continue the dream. You're buying the dream and you're continuing to buy on that speculation. This is not to say Tesla is going to crash and be another Intel. But as an investor now, you should be more careful when people are living the dream like this. And this is where I think human psychology kind of goes into the investing process. Anybody can justify a valuation, both fundamental investors and technical traders. You can rationalize any price, but what's important is what you're buying behind the price. You need to give value for what you're getting. My question, why buy Tesla now when you're expected to make less money over time than buy something that has a higher potential? And that's an opportunity cost for you as an investor, which you can't quantify, but is there. And that's where, Colin, you're talking about, you sit there with an investment idea that's not going well, and you look at the market and you see people making 6,000% in one day from trading naked calls on Tesla. And you're like, oh my God, what am I doing something wrong here? Sometimes the business you're in might be terrible, but it's good to take a step back and kind of realize emotionally where you are and emotionally where the market is at. And I think Intel and Tesla are pretty similar stories right now, where we're in the end of the great surge, which is a 5-step process where we have to eventually get a bust. So the stock has to cool down. The industry has to cool down. So a lot of the companies that are in there have to cool down and eventually get to a place where information is being processed rationally. And that's my prediction about the human psychology that's happening right now. I use Tesla because it's the best case, but there's other examples: Neo, Zoom, Netflix to a certain extent, and many other companies. Amazon is up there. I'm not saying Amazon is terrible. It's just saying now what you're paying for might not be worth as much as you think. And yeah, that's what I have to say with that.
Well, thanks for that, TK. That was very informative.
All right.
Go ahead.
Hello, everyone.
Hello.
Hello.
Sorry, just trying to figure this out.
Today?
Go ahead.
How's everyone doing today?
Good.
Good. And you?
Go ahead.
So, gentlemen, what's going on? What are we talking about?
We hear that you have a pretty epic tale about Sona Nanotech that we're really looking forward to hearing.
Yeah, the stock was $16 like a few months ago, and now it's trading under $1. Can you tell us what happened?
Yeah, the Canadian markets happened. And unfortunately, gentleman shared the story with me now. Because it did drop even from $16. Like, it had a quick drop to about $8. Not a quick drop, but gradually over a couple weeks, and but without any news. And people were doubling down on it, coming back. Some people, I was told that one individual got like a second mortgage to pick up more because of their hoping that this is going to do well. And it basically got a cult following. And there were people on Twitter who, if you said anything about Sona, they would jump at your throat. And that's the problem sometimes with having a take on an issue that, people are not necessarily, and it's not, you don't have to be a scientist to actually go and do some research and figure out.
I think we lost him.
So, go ahead.
We
We need
lost
some
him.
Hold on 2 seconds.
technical
here. Hold
difficulties,
on.
intermission music.
Yeah, yeah, right.
I mean, I think it's a story that it's definitely worth to tell because it has been one of the darlings on the Canadian market. So we'll definitely have Essa on in next week to talk about the rise and fall of Sona Nanotech.
That's a really good example of the psychology thing too, honestly.
I was actually just going to say that because, we've seen some of the charts that look similar. So I want to show you guys this one. It's 3D systems, right? Take a look at this. 3D systems. I think, a lot of people say 3D printing is the future. I think it still is, but look where the market's priced it, right? Rise and fall. And, going to what the markets are, right? It is about fear and greed. That are the only two emotions here on the stock markets and what drives price. I think it's really best to, define what type of trader or investor you want to be, right? So do you want to be like an investor or do you want to be a trader? Because I think the rules are a bit different. So I do both.
The way everything's set up, it doesn't actually help to.
Okay, so when I invest, I'm not really looking to get out of my position within a year. I'm holding it for much longer. And when I trade, that's where I am sort of looking into things such as emotions and all that kind of stuff.
Interesting stories next week, actually.
Awesome, brother.
Yeah.
Okay, take care.
So I wanted to mention some of the airlines, right? Because it has one of that good risk to reward type stories here. Yes, there was a pattern here. Yes, the stock popped. But as you can see here, from July until the end of November, airlines didn't do anything, right? So in those few months, you would be sitting holding shares in an airline company, but you'd be missing out on all the moves in Zoom and Netflix or other stocks there, right? So there is that opportunity cost. Which I think is very crucial, right? Like, do you hold shares in something that's not moving while you're missing out on things that are moving, or do you hold for the long term? And I think to define that, you have to just, tell yourself, okay, am I holding this as an investment? Meaning, 2 years, 5 years from now, it's going to be higher than it was where I bought it. Or are you looking at it as a trade where, okay, I might get out of it in a few weeks or maybe even a month or two. And I think that's very important because, I've been in this game for a long time and I've seen people who want to be traders for a certain stock, usually on the Canadian juniors, and then they end up becoming long-term investors or what we call as bag holders, right? In that stock. So, psychology and opportunity cost, how you use your capital, I think it's very, very important. And what I recommend is, have two portfolios, one for your long-term, where you're not really day trading or swing trading that you're just acquiring shares, buying for the long term, and then also one for trading if you'd like, right? If you'd like to do trading. I don't think everyone has to be a trader, but I do think everyone should have a long-term portfolio, in this type of world, right? So always, if there's something I'm going to leave you guys with, always have a long-term investment, and you'll do well, I think, in the end.
Yeah, and you really do want to have that length of time that you're planning on holding predetermined, so you're not buying and then going, now it's down to 10%, so I'm an investor now instead of a trade. So that's where that.
Yeah, that's where those numbers come, right? Because I've seen swing traders who are in junior minors and they're up thousands of percent and they don't take profits, right? Obviously, I'm not saying I'm the best trader, because I've had those cases in the past too. And actually, I still am holding on to some gold and silver stocks that are up 1,000%, right? But those I said are my long-term positions, because I still do think gold and silver are going higher. And I think these stocks that I'm in are buyout candidates, right? So that's my story. But if I do need capital, right, to buy other positions, I would sell maybe half of those shares to allocate into something like, I don't know, Blackberry again, maybe, or Village Farms. But yeah, I think, having that strategy, having that discipline is really, really important, right? And it comes down, we talked about it a bit in the past, but it comes down to emotions, right? Being strong with willpower and all that kind of stuff. And that's why I've said, right, most traders who are successful at trading and investing, they're good at anything else they do, because basically it's all about creating good habits, right? A lot of stuff on Hollywood and news media, it's very emotional, right? Like, oh, look at this trader selling right now because the market's tanking on the 5-minute. We've seen the movies Wall Street and The Big Short and all that kind of stuff, but they make trading very, very emotional, right? Like, oh, you got to react right now. You got to look at the 1-minute chart. Real trading is not like that, folks. Or the real winners who are in it for the long term, right? They are not making these crazy emotions or crazy decisions within 5 or 10 minutes, because you wouldn't survive as a human being, right? And that's why now robots, or not robots, but algos, right? Computers, they deal with the shorter time frames and do high speed and high frequency trading, because human emotions cannot survive in that type of environment for a very, very long time. And it's generally why a lot of day traders I know, burn out, right? Because it's something that the human mind just cannot take. And this is why I prefer swing trading, because you are looking at the 4-hour, you are looking at the daily charts. It allows you to be more patient, which means, you have a better chance of controlling your emotions. And it's a very difficult thing to do, right, in this type of world, because you're bombarded with emotions everywhere, right? Politics, movies, music, the media, right? So you have to be very careful on what you consume as well, and how you let it influence you. And maybe that's another topic, but the subconscious and the conscious mind, right? You got to be very disciplined on what you allow into your subconscious mind, because it does have an effect on how you actually not only trade and invest, right, but do day-to-day activities.
Well, that counts me out.
No, it's tough to do.
I'm forgetting who said it, but he's like, once the tide goes down, we'll know who was swimming without their trunks.
Yep.
So,
that's why a lot of the trading books, like, when people ask me what's a good book to learn trading, it's very difficult for me to actually recommend a book to learn trading, right? Because I think it's something you gain with experience, but generally, the top books that people read while they're investing or trading are generally like, self-help, willpower, discipline, focus. A lot of the Japanese samurai, Zen, Art of War style books, right? Because it's all about willpower and discipline and forming good habits, right? So those are generally the type of books that you see on lists for, helpful books for trading, right?
Absolutely.
All right. I think that is all the time we have for today. Thank you so much for tuning in. I hope you're not scarred like me with Vishal saying that automatic cars are caskets on wheels. I've literally been thinking about that this whole show. We will be back. Terrifying. We will be back next week. Thank you so much. Bye, guys.
Thanks, guys. And that's why you buy them.